Back here to share a few points on how to stay out of tax trouble. Today's topic is tax problems that lead to prison. First, let me say that it is surprisingly common for me to receive calls from people who are concerned about a tax problem that might send them or their spouse to jail. In most cases, that fear is unwarranted. It's only a psychological fear. I'm not discounting the power of psychological fear, particularly one recent case where a woman said she couldn't sleep, couldn't eat, her life was in chaos because she was concerned about a fairly innocent possible mistake on a 2015 tax return. Her from a mechanical and legal standpoint, her fear was uh, ridiculous. However, it's important to recognize that the effects of that fear, the psychological impacts, the psychological cause, is not to be dismissed as ridiculous, and that it sometimes does warrant uh, additional psychological or therapy treatment. So, in that particular case, that's what I did. I suggested that she talk with someone, not a CPA, but someone in the mental health field to get a grasp on that particular fear. But let's spend our time here today talking about the types of issues that uh, won't get you in risk of going to prison, and versus those that do, so we can leave with a clear distinction of the two. So the types of tax problems when you get a letter and you owe money to IRS or a state, the types of tax problems that will not lead to prison are: one, not having enough money, running out of money, having a business failure, bankruptcy, divorce, loss of job, failure to plan ahead, being a lousy business person, or just plain being stupid or victim of a theft or whatever the reason is. Not having money is not going to lead to jail time. Uh, on the other hand, intentional evasion of tax would include, and there often needs to be actual proof that it can be prosecuted, not just in your mind you're intentionally evading, but you're actually taking action to evade tax. The common examples would be uh, taking cash and making cash deposits in amounts under $10,000 specifically to avoid reporting to the IRS. That's a clear example of intentional tax evasion. Um, Making unusual purchases in cash, again, specifically to avoid reporting in tax. Common thing in my area, I'm down at the shore, uh, is purchasing a boat. I mean, people don't normally buy a 25,000 or plus a boat in cash, and yet those who run cash businesses often do, and that's again another clear physical indication of potential tax evasion. Another, and probably the one that I worry about the most, is making a false statement to a tax investigator, either IRS or state. And so, us professionals say, do not, if you have a tax problem, do not talk to an official. You can make your situation considerably worse, but you almost rarely can improve it. You will never get in trouble for lying, even intentionally, to your CPA, but you can, lying to an IRS agent can lead to jail time. Let me finish with a high profile example. It's some years ago now, but it's still I think familiar to people. I'm in South Jersey, and the Ocean City Boardwalk and the area around Ocean City has a pizza chain. It used to be called Mac and Manco, and now it's called Manco and Manco. Well, the owner was taking cash, not running it through the normal register and bank deposit, but taking cash out of the pizza shop and pocketing it. Not surprisingly, a lot of people buy pizza with cash, and it ran up into a few $100,000. Well, IRS is actually pretty good at figuring out when a pizza shop is underreporting their cash income. That is one of the things that their agents are trained to look at when they examine a cash-based business. So, revenue agents showed up at the owner's home in Summers Point, and as I don't think this was in the news, but I think I heard from another professional association that he and his wife were home. They were nervous, obviously, with agents knocking on the door. He was known to have a gift of BS and just started talking, just started making up all kinds of stuff that just turned out not to be true. It was more of a nervous reaction, but it clearly was an intent to evade telling the truth to an IRS agent who was there at his door. And that case did eventually lead to jail time. I think 15 months was the sentence, despite the fact that over 100 people showed up at the sentencing hearing in support of this very well liked community member, now a convicted tax criminal. So I hope that makes the distinction between what you need to worry about and what you don't need to worry about when it comes to taxes and prison. Thanks for showing up today. If you have a topic that you'd like to see covered in a future episode, please message me. If you like what you saw, please share the post or subscribe so that more people can enjoy and hopefully learn a thing or two. And I'll be back tomorrow with another Tax Minute.